I'm giving it around 2 to 3 more minutes for everyone to join, and then I'll take your doubts from the last session. I'm still on the first slide of our PPT. If you have any other queries from what we did yesterday, if you were there in last session, please go ahead, ask. Even if you were not there, please feel free to ask. I will keep on scrolling down till wherever we have done. So I'm giving it 2 more minutes for everyone to join so that we can start with the next segment, which is cash from investing activity. Nikhil ji, all your PPTs will be posted in your group. I will inform the concerned people tomorrow to do so. So you will get all these PPTs. Anjan ji, I am not very sure of the question. Yeah, we will use whatever fundamentals I am discussing. Those you should analyze those before you select any stock. If that was your question. The first slide is on your screen. If this is fine, as we did yesterday also, I move on to the second slide, which is this. The third slide, wherein we discussed what is depreciation, what is amortization, wherein I told you depreciation is usually charged on tangible, non-current assets, that is tangible fixed assets. And amortization is done for intangible fixed assets. Any confusions here, anything, any question that you want to put up, please feel free to write it. And if this is done, then we move on to the next one, which was this. So we adjust our net profit with non-cash expenses, which were depreciation and amortization, and also changes in working capital. Changes in working capital means changes associated with current assets and current liabilities. So a decrease in current asset is added, whereas a decrease in current liability is deducted. Increase in current asset is deducted, and increase in current liability is added. So this is what we did. This gives us cash from operating activity. Once we know our cash from operating activity, then point was the final figure, if it is positive, we believe that the company is good, but it is again better to analyze the cash from operating activity of the last 2-3 years. And if it is showing an upward trend, that is cash from operating activity has been increasing over the years, then it is good for us to invest in this company, provided we will see the debt equity ratio, EPS, and dividend declaration and all that, plus the cash from investing and financing activity also, which we will analyze today. And if it is negative cash flow from operating activity simply tells us that we are losing on cash from our business activity. So we can bring in more cash 1 year, 2 year down the line, but bringing it every year will be difficult, and such companies, it is very difficult for such companies to survive for a long period of time. So we should not or it is very risky, I should say, for us to invest in such companies. I think that is what we did yesterday, wherein we analyzed this slide, which is this. As also this. So negative cash flow from operating activity simply tells us business is losing money. So if the business is losing money, it will not be able to survive for a long period of time. Sooner or later, it will lose on its patience also, and therefore it will have to rest the business. That is, it will have to bring the business down. So to invest in such companies is very risky for us unless we are ready to take such risks. Again, cash from operating activity being negative, even if you want to take a risk, it should be a very calculative risk. Why? Because you already know, and if you know it has been losing on money from many years, then it is not wise for us to invest. So to put it bluntly, I would say, please do not invest in such companies. This is what we did in the last session. I think last session also we were doing something like this only. I'll give you 2 minutes for you to ask me any questions that you have before we move on to the next part of cash flow statement, which is cash from investing activity. No questions, anyone? Okay. The next part of cash flow statement is cash from investing activity. We are talking about our own investments, but a company also makes its investments. In fact, to start a company, the company has to first invest. And what does it invest? It invests in fixed assets. It puts in its money in fixed assets. So that is a part of investing activity. So investing activity would Dakshji, I came back to your question. Yes, it is quite possible that a business is making very good sales, but in one particular year, because of some untoward incident, there is an extraordinary situation which has caused a negative cash flow. That's why I told you we will check it for the previous years also. Every year, it cannot be an extraordinary situation. So if it is in one particular year, say there has been an abnormal loss, there has been a fire in their factory, or there was what we experienced 2 years back, there was a pandemic because of which the sales have gone down, and because of which the cash from operating activity has become negative, then it's a different thing altogether. But if from the last 3, 4, 5 years this is the trend, then we avoid such companies. Dakshji, I hope I have made myself clear. If there's any other query, please ask. Okay, so we move on. The next part of cash flow, there are 3 parts of cash flow statement. One we have done, which is cash from operating activity. The second is cash from investing activity. As I just said, before we start any business, it is imperative, it is compulsory for us to put in some money in the business. that putting in money in the business, and that from that money I'm buying, say, assets for the business, say machinery, or any investments that I do. I buy plant, I buy building. If I'm buying all this, that means I am putting in the company's money somewhere. So wherever I acquire assets for the company, that would be cash from investing activity. Similarly, if the company has been going on for many years, now that company will have to change according to time. It'll have to buy in new machinery also. So what does it do with the old machinery? It sells off the old machinery. Now buying or selling of these assets of the business will come under investing activity. Now, I will repeat myself and I will say selling its business product is a part of operating activity, but selling any of its assets would be a part of investing activity. I hope this is clear. So, when I sell my business product, I call it as sales. But if I'm selling any other thing, say I'm selling my ACs or I'm selling my machinery, I'm selling building, I'm not a broker, I'm not a person who sells real estate, but I'm selling my building or I'm selling my factory, that will not be a part of operating activity. It will be a part of investing activity. Why? Because the company is decreasing its assets. So only when I sell my business good would it come under operating activity, else purchasing any asset or selling any asset will come under investing activity. Okay, now I want answers from you. When I purchase any building, or I purchase machinery, or I purchase plant, or I purchase long term investments, according to you, will there be an inflow of cash or an outflow of cash? मतलब अगर मैं सामान खरीद रही हूं, तो क्या कैश बाहर जाएगा या कैश अंदर आएगा? Vanishri ji, if I if it's my business, say to produce pens, so to produce those pens, I'll have to buy machinery. Am I right? And that machinery I'm going to use for 4, 5, 6 years. So if it's an asset, and why am I buying it? So that it gives me returns, it gives me profits. So that is why it is termed as investing activity for a business. That's why it's a part of, say, investments for the business, because we are doing it in anticipation of returns, in anticipation of profits that I make. Yes, I'm adding an asset to my company, but if I'm adding an asset to my company, I'm also making my company grow. So I'm investing in my company for its growth. About selling, I will talk about it. Correct. I'll talk about selling. So when I buy an asset, it's normal thinking that we are doing. If I go and buy bread for the house, or I go and buy a rice packet for the house, then I will get that rice packet, but there will be an outflow of cash from my home. So when the company buys these assets, it will be assets are increasing, but if you think about cash, there is an outflow of cash. So the cash will decrease. Um, Vanishri ji, please think about it. You go and buy anything from the market, there is an outflow. Money decreases, money goes out of your purse. How is it an inflow of cash?
No, we are not talking about returns right now. I'm just talking about when I buy an asset, at that moment, what is happening. When I'm going to buy machinery, I get the machinery to the factory, but what happens to my cash? My cash will be going out of the business. Later on, when there will be returns on this machinery, that will be a part of operating activity. That will increase your sales, say, next year. Right. So, whenever we will buy, or I will purchase property, I will purchase plant, I will purchase equipment, I purchase machinery, I purchase a building, I purchase a factory. So if I'm purchasing any of these, which is going to stay with the business for a long period of time, that will be a part of investing activity, and there will be an outflow of cash. I'm stopping so that if there is any query, please pen it down or please write it down in the chat box so that I can address it before I move ahead. Okay, I don't see any questions, so I'm moving ahead. Um, Supposing today, there are many companies which are being acquired. So if I'm purchasing some other company, I will have to give money to their promoters. So purchasing any other company would also be an outflow of cash. I hope you agree. Similarly, if say I'm making a fixed deposit in the bank, so to make the fixed deposit, I will have to give cash to the bank. So that will be a part of outflow of cash. So whenever I will do any long-term investment, or I will purchase any long-term investment, it will be an outflow of cash. Correct. Now that I've made a fixed deposit, say in the bank, I'm giving you the simplest example. On that fixed deposit, you will receive a certain amount of interest, right? That interest that you will receive from the bank or from wherever you've done that investment will be an inflow of cash. Is that clear? So, whenever I'm buying any asset, it's an outflow of cash. But if I'm receiving any interest on whatever asset I have bought, that will be an inflow of cash. So, buying any asset, outflow. Receiving any interest on that asset would be an inflow of cash. Similarly, now, uh, uh, not in balance sheet, sir. It will be reflected, Swastik ji, in your cash flow statement. We are right now dealing with the cash flow statement. In the balance sheet, it can be reflected as increase. When you are purchasing an asset, it will be an increase in asset. When you are purchasing investment, it will be an increase in investment. But interest is not reflected in the balance sheet. Similarly, the way I have purchased assets, I can also sell my assets. No, I'm buying a new machinery, so I want to sell off my old machinery. नई मशीनरी ले रही हूं इसलिए पुरानी मशीनरी बेच दूंगी, या कोई और मेरी कंपनी किसी और छोटी कंपनी को एक्वायर कर रही है, या मेरी कंपनी को कोई बड़ी कंपनी एक्वायर कर रही है, ऐसा भी हो सकता है. So when I sell my company, there will be an inflow of cash. तो मैं पूरी कंपनी ना बेच के पार्ट ऑफ द कंपनी बेच रही हूँ, there will be an inflow of cash. When I sell any machinery, I sell property, I sell plant, I sell factory, whatever I sell, there will be an inflow of cash. So the cash flow from investing activity is very simple. So whenever it is buying assets, it will be a negative flow, that is outflow of cash. Whenever I'm selling my assets, it will be an inflow of cash. One more thing that we have done is interest received. So fixed deposits that we had done, that doing fixed deposit is an outflow. But if I'm receiving any returns on that fixed deposits, that will be an inflow of cash. So we add and subtract all these figures. If it's positive, it will be inflow. If it's negative, it will be an outflow of cash from investing activity. Now, I'm reading this slide out to you. If you have any other query, please do let me know. So a part of cash flow statement that shows the cash generated or spent relating to investment activities. That will come in cash from investing activity. So what are the things that come? It is purchase of property, purchase of plant, purchase of equipment, purchase of machinery, purchase of other companies. All these purchases, as we have discussed, would be outflow of cash. Similarly, sale of property, sale of plant, sale of equipment, sale of machinery, sale of other smaller companies or part of my company would again be inflow of cash. One more thing, purchase of long-term investments would be an outflow of cash, and any interest that I receive on these investments would be an inflow of cash. Plus minus these figures, net effective figure I will find out. If it is negative, it is an outflow of cash from investing activity. If it is positive, it's an inflow of cash from investing activity. Now we will talk about what is good for the company, but before that, I give you 2 minutes to think. According to you, a negative cash flow from investing activity is good or a positive cash flow from investing activity is good? ये सोच के बताइएगा, क्योंकि मैंने आपको पैरामीटर्स बता दिए किसकी वजह से नेगेटिव होता है, किसकी वजह से पॉजिटिव होता है. Anuji, that's absolutely right. Sale of companies or property is outflow of investing assets, but inflow of cash. So I want to know whether the net effective cash inflow or outflow is good for from investing activity point of view. Loan is not a part of investing activity. Loan is a part of financing activity. Rudraji. I'm sorry, what is right? Sale of companies, I think I've addressed this. No, my question is, according to you, cash from investing activity, should the net effective, सब कुछ प्लस माइनस करके जितना चीज लिखी हुई है अभी आपके स्लाइड पर, आपका नेट फिगर जो आता है, क्या वो नेगेटिव अच्छा है कंपनी के लिए या पॉजिटिव अच्छा है कंपनी के लिए? That's my question. Vanishri ji, I got your answer. We will talk about all the answers that I'm getting once I get the answers. I've just got the answer from you and I think one more. Vikas ji, I got your answer too. Good evening, Purnima ji. More answers I'm waiting for. All right. So if Those of you who are saying that positive cash flow from investing activity is good. So if I sell my asset, I'm selling my machinery, I'm selling my plant, I'm selling a part of my company. So when I'm selling, that means I am decreasing my capacity to produce next year. So I'm narrowing down my operations. If I'm narrowing down my operations, that means I don't think that my company is doing well. Then how is it positive is good for us? So we should remember that if a company is buying more assets, buying more machinery, buying a factory, buying other companies, that means the company is thinking of growth. Such companies should be good for us. But if I'm selling off my assets, etc., then that company is not good for me. Yeah. No, negative. When purchases are negative, so net effective is negative means you are purchasing more. Net effective is positive. That means the cash flow from investing activity is coming positive. That means your plus figures are more than your minus figures. That means your inflow is greater than your outflow. Cash flow from investing activity will be positive when your inflow of cash is greater than your outflow of cash. And cash flow from investing activity is negative when your outflow of cash is greater than inflow of cash. So outflow would mean that you are buying more assets. That means you are thinking of growth. So it tells us that cash flow from investing activity, if it is negative, that means the company is thinking of growth. The company is thinking of expansion. Whereas if I'm selling off my assets, that means the company is thinking of narrowing it down. Company might be thinking of closing down its business. So that is not good for us as investors. So the negative cash flow from investing activity, when I say negative cash flow, that means my outflow of cash is greater than inflow of cash. That means I'm purchasing more assets rather than selling them. That tells us that the company is in growth mode. So the company will only buy assets when it is confident that it can recover its own money. That means that it can create more profits. Whereas if the cash flow from investing activity is positive, it tells us that the company is narrowing down its operations. That means it is not a profitable company. It does not want to expand. It does not want to do further investments. That means the company itself is not positive about its own working. Now, this is what I wanted to tell you about investing activity. In case of any query, I'm waiting for 2 minutes. You can think, you can write down your questions, and I will address them one by one. But rest assured, I will address all questions. Okay. After this, we have the next and the last part of cash flow from financing activity. If possible, we'll finish that today, and tomorrow I will give you certain figures. I will hide the name of the company. so that the name of the company does not affect your decision. And I'll give you these figures of cash flow statement. I will ask you to analyze, and then we will analyze it together. But first, let me finish cash flow from financing activity. Right. Now, what do I mean by financing activity? The way we discussed, the thing that I mean from investing activity is when I am putting in my money in machinery, plant, equipment, say factory, say property, etc. That is a part of my investment. When I say cash flow from financing activity, basically finance means where do I generate my money from? Now, where do I generate my money from means business. How is the business acquiring its money? Business के पास पैसे कहाँ से आ रहे हैं? We know that the business can get money in two forms. One is from its owners, which is known as equity, which is also known as share capital. And the other is if the business takes loan, which is known as debt. So the first thing that we did in our sessions was debt equity ratio. So both debt plus equity is known as the capital of the company. This is the manner in which the company can acquire its money, which is a part of financing activity. तो कंपनी के पास पैसे कहां से आ रहे हैं? That is a part of वही financing activity है. अब पैसे दो तरीकों से आ सकते हैं कंपनी के पास. या तो वो ओनर्स से ले लेंगे, जिसको हम पार्ट ऑफ शेयर कैपिटल बोलते हैं, पार्ट ऑफ इक्विटी बोलते हैं, शेयर होल्डर्स फंड्स बोलते हैं, या कंपनी लोन लेगी. लोन को हम लॉन्ग टर्म बोरोइंग्स भी बोलते हैं, डेट भी बोलते हैं. पर ये दोनों चीजें, क्योंकि इन दोनों चीजों से कंपनी के पास पैसे आते हैं, इनको हम बोलते हैं कैश फ्रॉम फाइनेंसिंग एक्टिविटी. ना अगर मेरे को पैसे से मैंने शेयर्स, कंपनी ने शेयर्स इशू किए. कंपनी कब शेयर्स इशू करती है? जब कंपनी को पैसे चाहिए होते हैं. अब यूजुअली कंपनी को कब पैसे चाहिए होते हैं? जब कंपनी और अपने एक्सपेंशन करना चाहती है, कंपनी ग्रो करना चाहती है, तभी वो अपने शेयर्स को पब्लिक में देती है. हम वो शेयर्स की बात नहीं कर रहे हैं जो मार्केट में ट्रेड होते हैं. वो तो कंपनी ने ऑलरेडी इशू कर दिए, वो तो रीसेल हो रहे हैं मार्केट में. जब मैं बोल रही हूँ इंक्रीज इन शेयर कैपिटल, जो डायरेक्ट कंपनी इशू कर रही है, ये उन शेयर्स की बात हो रही है. So this is primary issue from the company's side, that is known as increase in share capital. This is not what we trade in the market, in the stock market, because that trading in the stock market is resale. That is not from the company's side. That is from one shareholder to the other. Those shares have already been issued by the company. So these we are talking about fresh issue. Now, when the company issues shares, so it gives shares to the shareholders, and in return, it receives money from these shareholders. So it's an inflow of cash. Similarly, when a company takes a loan, it can take loan in the form of bank loan, it can take a mortgage loan, or it can issue debentures to the public. So just the way shares are a certificate of ownership of a company, debentures are a certificate of loan for a company. So if the company takes issues debentures, in other words, it is taking a loan from the public. So that will be an inflow of cash for the company. Debentures देकर cash मिल रहा है. So whether it is increase in share capital or increase in debt, both mean that there is an inflow of cash. Vanishri ji, splitting of shares is something very different. Splitting of shares is not increase in share capital. Splitting of shares का simple ये मतलब है कि पहले share की value, initially the value of the share say was 100 rupees, I am splitting the share instead of 1 share, now I will say 10 shares, but the value of the share will become 10 rupees. So the entire value is still up to 100 only. That is the meaning of splitting of share. When I say increase in share capital, that is not splitting of share. That is only increase in the number of shares. Increase in share capital means the amount of share capital will increase, and that will only happen when I'm issuing new shares. So both increase in share capital or increase in debt is an inflow of cash. It will be both come in financing activity. Yes, Vanashri ji, it is when the company announces that it will issue shares. So from the company side, there are applications for you to apply for their shares. That is increase in share capital. IPO, correct. Yes, in case of debentures, company has to give out interest payments because debenture is nothing but a loan. So if the company has taken a loan from the public, it has to give interest to the public. Anjanji, I hope it's clear. So if a company has taken a loan, the company will also return the loans. If not today, maybe 5 years back, later, 10 years later, but it is imperative that it will have to return the loans. So the repayment of loan is also a part of financing activity. So when I'm repaying the loan, there will be an outflow of cash. Initial public offer is there, but public offers are also there. See, whenever a company is formed, it is formed with an authorized share capital. So what is authorized share capital? The maximum amount of shares that a company can issue in its lifetime. The company does not issue all the shares at one go or in its IPO. It keeps, say it issues 10% of the shares. The remaining shares, it will keep on issuing from time to time whenever it thinks of expansion, whenever it thinks of growth, and it is in need of money. Then it will offer it to the public. No, not very often. That you're right. Not at all very often. Because the company already has its reserves. It can go on and take more loans. Yes, Anjanji, debentures are also purchased like stock. And convertible debentures, Anuji, are those debentures which can be converted after some period of time. That is specified in those debentures. That is not fixed term for every debenture. It is specified in that company's debenture. So after those number of years, those debentures, if it is specified, can be converted into shares. So once they are converted into shares, then you will not get any interest on those debentures. Then you've become a shareholder of that company. Okay. So coming back to the slide, increase in share capital, inflow of cash, increase in debt, which is taking a loan, inflow of cash, repayment of debt, outflow of cash. As just discussed, for every loan that I take, I will have to give interest. That interest paid will be an outflow of cash because I'm paying, so cash will be going out. That there is no rule, Anjanji, that interest on debentures has to be higher than dividend or lower than dividend. That is no rule that I can tell you. And dividend, we already discussed what is dividend. Dividend is a part of profits that a company decides to give to its shareholders. Again, if I am giving that money to the shareholders, from the company's point of view, it will be an outflow of cash. So again, plus minus figures both are there. You will find the net effective figure that will be known as, if it is positive, cash flow from financing activity. If it is negative, cash used in financing activity. Now, theoretically, it is said, yes, interest on debentures is very much fixed, but dividend is not fixed. The way loan, debentures are nothing but loan. The way when we take a loan, we already know this is the amount of interest that we have to pay. Similarly, the amount to be paid on debentures is always fixed, and the time is also fixed. Is it annual payment or is it half yearly payment? That is also fixed. I'll wait if you have queries on financing activity. Otherwise, we'll do this, whether it should be positive or negative. Right. Now, see, theoretically, it is said that a negative cash flow from financing activity is good. Now, why is it good? If I'm repaying a loan, that means I have enough cash to repay the loan. That means the company has made enough money that it can afford to repay the loan. Negative cash flow from financing activity also tells us that the company has been declaring good amount of dividend. It has been paying good amount of dividend. So as prospective shareholders, it is a positive for us that we will be getting dividend from this company, which also tells us that the company is making profits, which also gives us the confidence that the value of the share will go up. But positive cash flow from financing activity can be, it is not necessary, but it can be a sign of weak revenue. But a positive can also be a sign of, on the other hand, it can also be a sign of that the company is thinking of expansion. Why? Because then only then it has it offered more shares to the public. It has offered shares and it is getting money from the public. It has offered debentures to the public. It is taking a loan. It is accumulating its resources so that it can go into its expansion mode. So that is why the term may be, it is not a sure short thing that, oh, cash flow from financing activities is positive, so I should not invest in this company. No, that is not a fixed rule. So these three are cash flow from operating activity, cash flow from investing activity, cash flow from financing activity. These are the three things that we need to know, and I think we know it now. What the company does is it then adds up all these three and it says this is the cash that we have generated from A plus B plus C, that is from operating activity, from investing activity, from financing activity, and it finds out its net effective cash generated during the year. But that we need not analyze. If we can analyze these three and we understand these three, then we can think about analyzing some company's cash flow statement in tomorrow's session. Any other query that you have related to any of these three things, please go ahead and ask. Okay, company. Okay, Vanishri ji, when the company gives us shares, I didn't get your. I'm sorry, Vanishri ji, I'm not able to correlate your question. Um, uh, My question, when the company gives us shares, yeah, when the company gives you shares, when it offers you shares, the shareholders who have invested in the company will have to give money to the company, if that is your question. Yeah, then the company will have to, company gives shares to the public and takes money from them. So that is why I said it is an inflow of cash whenever there is an increase in share capital. Any other query, any one of you, please feel free to ask. Otherwise, this is what we had to do in today's session. Tomorrow's session, I would request, if possible, please join on time so that all of us can analyze the figures together and then discuss them together. No, those shares are not from the daily equity market. Those are, as I just told you, a company has registered itself, say, with 1 lakh equity shares. Just an example. The company till date has issued 30,000 equity shares. So those 30,000 equity shares are circulating in the equity market. But when I'm talking about cash flow from financing activity, the company is, say, issuing 5,000 more equity shares. That 5,000 would be increase in share capital, that 5,000 into the face value of the share, the original price of the share. No problem, Purnima ji. Even if you are little late, I will go back to the slide and we can analyze it together. Correct. That's right, Vanashri ji. New shares are only issued from these IPOs. The old shares are being circulated in the equity market, which are being resold from one shareholder to the other. The company does not get money in that. Financial statements of the companies, Jasprit ji, that we haven't analyzed and we haven't discussed them. So that, how do we understand the financial statements of the companies? Yes. Yes, if the cash flow from operating activity, I'm talking about operating here, if it was negative in the previous years, but now it has turned positive, so the company is slowly inching towards making profits. But that is only for operating. Net effective cash flow, there is no rule like that. Vanishri ji, these slides will be posted in your group. You still want me to go up? I can do that. Here. So this is where we started with. Okay. Okay, Vanishri ji. Any other questions, everyone? Yes, definitely. Definitely, Purnima ji, these slides will be posted in your group. So thank you, everyone, and good night.